Hi friends, so let's start today's analysis. I think a typical expiry day, Nifty moving up, down, up, down. We closed in green, although, and it was a nice close, I would say. We closed above probably 23 to 50. That was a good close, but we had a lot of ups and downs and typical expiry day. So we'll start with the global markets to just take a small glimpse of what happened. So yesterday was a big event in terms of Fed meeting conclusion. As we were expecting, there was no change in the interest rates. It was status quo, and the interest rates in US now stands at around 4.25 to 4.5%. So no change. What was the commentary from Mr. Powell? The commentary from Mr. Powell was that he is in no hurry in decreasing the interest rates now. The dot plot is still saying that there will be two rate cuts in the year, although the market expectations are very low. Now the probability for a rate cut in March is reduced to 17%, and in the May it is around 40% around. So that means the earlier expectation of the rate cut is only in June and beyond. So June is too far away, and the market will not try to take leads from so far of an event. He's also told that the present scenario is good enough to keep the economy healthy. The economy is still healthy, and it is poised to take the challenges from the economy, which I think he was referring to the Mr. Trump's sanctions, if at all they come, and inflation if it is introduced. So he was just slightly referring to that. So that was the commentary for Mr. Powell, and it actually became a non-event. Nothing happened to the U.S. markets; they were pretty flat. The dollar index was pretty flat, and even the bond yields are pretty flat. So dollar index is now trading around 107.8 or 9, around that range, and bond yields are trading around 4.5 levels or so. So there was pretty flat, no event at all, and one event is behind us. The one data we have swallowed. Another data was the US earnings in terms of Meta, Tesla, and Microsoft, big tech earnings. We have results from Apple today. So, so the results from Meta were very good, and that's why we had a good showdown in terms of the stock price yesterday. So Meta was up around 4 to 5%. Tesla results were not good. They gave a guidance of 30% increase in sales, which was much below that. So that stock took a hit. Although post-market commentary was good, so in the future it was trading slightly in green. Microsoft results were good, but the stock still fall because Microsoft is saying that they will still invest $80 billion in AI, which market did not like. The market thought if the AI model is getting built up in $6.5 million, then why do you want to invest $80 billion? And the stock was down around 7%. So Microsoft took a hit because of that, but the numbers were good. So this was the earnings part and Mr. Powell. Apart from that, Chinese markets anyways and the other Taiwan markets anyways, they are closed, they're enjoying their new year. So we didn't have much of a clue from there. Today again we have a lot of data from US. We'll be having GDP numbers from US and initial jobless claims. So these two data also market would be viewing. Although market will not be taking much cues out of it, but these are some data which is yet to come from US today. Now, in the Indian markets, we had anyways earnings which are continuously going on. Today also, now we have six Nifty earnings and around 15 FNO earnings. So we'll be tapping on that. Earnings are coming, mixed results we are seeing. Some results we are seeing good, some results we are seeing bad. But what the market mood is that if the results are good, it is not rewarding much. But if the results are bad, it is punishing it very brutally. So that's how the market perception on the results are as of now. Now we are entering into the budget week. So Saturday we have our own budget. So we'll be taking cues from there. Expiry is also over now, and today we'll be reacting to the 6 numbers on Nifty and probably 15 numbers of FNO. Tomorrow we'll be reacting to that. After that, the numbers we'll say 70% of earnings season will be closed, and then we'll be looking forward purely towards the budget. Now, how exactly is our markets placed? So it is looking like that markets may short covering is still going on. We were having around 2.1 lakh contracts of short in the system. We have to see how much rollovers have happened. So how many shorts has been carried to the next one? That will be interesting to see tomorrow. We'll be seeing those kind of numbers. Today, at least, some of the short covering would have happened because we saw a first move in the morning. That was again short covering. Then we saw selling in the stocks and the Nifty was again brought down. Then we had one more level of short covering. So it is looking that some of the shorts are covered. Now, after the expiry, how many shots are there? We have to see tomorrow, and we'll take a clue from there. But I feel that whatever shots will now be left, they will only be as a hedge mechanism for the budget. I think the major shots would have been covered in terms of earnings, in terms of Donald Trump, etc. All those things. On first wave, anyways, the sanctions day is also there from US, so those also clues we'll be waiting for. I think they will come Saturday night, so we'll be reacting to them on Monday only. But that is another thing it will be, which will be like take a notice on. Today, VIX also was down around 6 to 7%. It's cooled down on a 6 to 7%, but it is still hovering above 15. And above 15 bigs, generally, I feel that it is not the right levels to buy. Generally, you should take it below 15, and that becomes more, more sanguine. So, still closing above 15, which is slightly above the comfort level, but it has cooled off by 6 to 7% today. And the cooling off has happened even when the budget is there. You have only tomorrow's day to take the positions of budget. Generally, a lot of option players will take advantage of budget in terms of will try to have strategies or they will do long short things. All those things happen in the budget day. Generally, the VIX generally rises too much, but it has not happened. On the contrary, it went down, which means market is probably anticipating that might be a slightly non-event kind of a thing, and probably the traders are not expecting a big fireworks in the budgets for this year. So we'll have to see how the budget comes out tomorrow. We'll also have the economic survey coming on tomorrow. So we'll see how exactly the economic survey comes out and what are the clues we can take out from there. So this was about the VIX. In US also, VIX has cooled off in 2 days, and now it's around 15 or so. So US VIX is also cooling off. That's again a good news. In our markets, so our view still remains the same, that we should remain on our positions. As of now, we're not seeing a big threat. Yes, we are swelling a lot of inputs, a lot of results here and there. But I think the numbers, whatever the news are coming, market is probably chewing it. And there is no reason to panic at this moment. A lot of selling has happened. And as I'm saying that, a lot of buying is now coming from the DIs, which means that these levels are becoming comfortable for the DIs to buy their stocks. Also, today, mid cap and small cap were probably flat. Nothing much has happened on mid cap and small caps. It also was swinging up and down as the Nifty was swinging up and down. But we were not seeing any major panic in mid cap and small cap. So, nothing much to discuss on the markets today. We don't have any much. Since yesterday, probably the US event became a non-event. We didn't have too much fireworks today. Tomorrow would be a day because market will take positions. Also, tomorrow will be a first day of the new series. So that will be very interesting to see how the market behaves tomorrow. Generally, if the first day of the series we see a good buying, that means if the market is going for long positions after being, we are around still 3,000 points down from an all-time high in terms of Nifty, which is around, around 13%. So, if at all the first day of the month, if we are seeing buying and if we are seeing long position, that means market is trying to look for some kind of a relief rally in this month. We also seen the data for last 20 years. Probably January series are also closing negative now. So there are 4 series now on the trot consecutive. We have closed negative. So October was negative around 6 to 7%. 2% again was negative for November. 2% negative for December. Now again 2% negative on January. So 4 consecutive series we are negative in F1 in Nifty. Consecutive 4 times. It has happened only 4 or 5 times in the last 30 years when we have traded in negative for last continuous 4 series. Consecutive 5 negative series has only happened 2 times in the entire history of Indian stock markets. One was in 1986 and second was 1984 and second was in 1990. First was in 1986 and second was in 1994. Sorry. So only 2 times in the history of Indian stock markets when consecutive Nifty has closed negative for 5 consecutive months. So this now we're entering into 5th month now. So if I go by history, the odds are very less that this series also will be negative. Tomorrow would be a testing day, but the way the markets were closing in last half an hour, I think a lot of long positions were added. A lot of positions were taken. It looks like market is poised to take a relief rally from here on. Anyways, the numbers, anyways, the scenarios from domestic and global are looking like that we should not be going downward from here. Probably 22,800 levels that we have touched in January series and 47,900 in Bank Nifty looks like they will be supported until we see a big global event or a big negative news in terms of sanctions on 1st February or the budget. These are the only two events left now. We have swallowed all the earnings. We have digested all the earnings now. We digested Fed thing. We digested the inaugural speech of Trump and whatever things he has to say. We digested all those Trump ceremony. We digested our earnings. We digested the Fed event. Today's expiry also we digested now. Now we will be looking for three things now. One is 1st February sanctions from US. What sanctions he's putting on what quantity. Second will be digesting our budget. That is also on 1st February. And on 7th February, we'll be digesting the RBI policy, what comes in for our markets. So three things we have to now digest, or three triggers are there in the market, and all three are big triggers. But looking at the market, looking at the screen, I think the market is pretty relieved now to take a small rally from here. Why I'm saying small rally? Because I don't think we'll be looking for a very big rally at this one until something drastic comes in budget or RBI policy. We'll see that. But as of now, some relief rally is looking like we should be happening in the coming 7, 8, 10 days. So let's fasten our seatbelts and just keep on having a closed look and all the numbers and how the events pan out. I'll be anyways telling you how things are looking. As of now, markets are looking solid. Markets are looking pretty, I would say, the bulls are in charge. And as of now, I don't see any big downfall from here. So let's see how it goes. That's all for today. Thank you so much.